Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for August 15th, 2021. Hope you guys are having a great weekend. I know we're in the middle of the summer doldrums. I know. Volatility is very low. Stocks are at all-time highs. Why should you even watch this video? Well, it's important. The reason why it's important, we have a lot of events happening this next week, but currencies are wound up, and I think that this week might be the week that you see a little bit of movement in the currency market. So before I get into all that, I just want to say if you like this content, make sure you give us a thumbs up, subscribe to the channel down below so you don't miss any of our daily videos that we put out. Also, I need to say if you haven't tried out Forex Analytics, do so. You can now try it for $1 for 10 days. We had removed the pricing a while back, or actually this week, because we have joined forces with the Forex Flow Live team. And so because we have merged with the two, we had a special pricing that was only available for a couple weeks. If for some reason you missed the special pricing discount, make sure you reach out to Ryan at forexflowlive.com. You can actually reach him on Twitter and say, hey man, can you hook me up with the special pricing? He might be able to hook you up. But it's not available on our site anymore, but you can try Forex Analytics, $1 for 10 days. Make sure you download the mobile app, which we are rewriting currently, but the app is still awesome. For those of you that use it, you know it. Make sure you get involved in the chat rooms because that's where we're all at. So let's talk a little bit about, well, here's Forex Analytics. That's data flash. You can remove that. That's included with your subscription. I want to take you into the calendar, and that's the reason why I'm on this page right now. All the analysis on Forex Analytics, the basic technical analysis, the candlestick analysis gets done over the weekend. It's not done yet by our team, so I'm going to be going to live charts, to go through the analysis there. But I just want to let you guys know you'll be getting, updated analysis throughout the course of the weekend on that. But you really got to pay attention to, the calendar that's upcoming. And I want to talk about this next week. So this next week, as far as important economic data goes, you have retail sales in the U.S. Is it as important as inflationary data? No, but seeing where the consumer's at right now, based on these, I want to say inflated, these inflationary prices that are creeping into the market or have hit the market, I think that's the better way to look at it. Is it starting to influence consumer spending? My assumption is it's going to start doing it soon if it hasn't already. Because, whether it's the prices at the pump, prices at the grocery store, rents, housing, it's going to start to impact consumer spending. And if consumer spending starts to slow, especially here in the US, that's not good, right? That's going to slow down economic growth substantially. So, high inflation, low growth, you guys know what the S word is, and it's not shoot, and it's not crap. Anyway, we have industrial production numbers that are coming out also in the US this week. New Zealand has their interest rate decision, and I'm going to stop here and talk a little bit about that. You know what? Actually, before I even get into that, I had Bitcoin on the screen, and the reason why I wanted to show you this, you notice that Bitcoin actually hit the 618 retracement this week at 48,332. That's the 618 retracement of the most recent leg lower. Actually, let me take this and put that spike down right here. Okay, and now you can really see it. Hit the 618 retracement. It's actually at 47.75, whatever, it's basically 48,000. Anyway, we hit the 618 retracement. That's important because we rejected it. And what's going to be really important for crypto traders is that we don't slip back below the 200-day moving average, and especially below like this 43,000 level. 42,500 was a big level for crypto people when it broke out. That 42.5, 43,000, that's going to be really big support on the way back down if we break. That's why I really think if you're trading crypto, that's the number that you want to be paying attention to. if you're bullish, and I think you should stay bullish while you're above that level. All right, going back to the Kiwi. So the RBNZ is expected to raise rates, and many economists are expecting the RBNZ not only to raise rates this month, but also another interest rate hike in 2021. So that, for the most part, is priced into the market. The RBNZ and their statement will matter, because if for some reason they start, they've been really hawkish. They're one of the only central banks that are really making a move right now, with higher rates. But if they start walking things back, maybe because of COVID, the Delta variant, whatever, maybe the higher inflationary pressures are starting to crimp, growth, whatever the case may be, we have to pay attention to it, because if the RBNZ misses a step whatsoever from being hawkish, that might be enough to really impact the Kiwi on the short side, or on the downside, excuse me. And you have to realize that the Kiwi dollar has acted a lot better, especially against the Aussie. The Aussie New Zealand currency pair, we've been bearish as it's dropped through this support, and it cracked through another level of support over here on the February lows. We're basically getting close to, well, we're at 2021 lows, but we're getting close to that end of 2020 low. And if we are going to be more of in a range in the Aussie New Zealand here, like a bigger just range, if you will, it's going to have more to do with the RBNZ right now, because if you look at the RBA, they're probably a little bit more dovish because of the continuous lockdowns, and everybody's negative on the Aussie because of the continuous lockdowns and how that's going to impede on growth, yada yada yada. Well, if people feel that the RBNZ is not quite as hawkish as they want, you might see a little bit of pullback in the Kiwi. And the reason why I pull up the New Zealand dollar is, you can see we're still below the 200-day moving average. We have this nice little triangle. I believe this was one of my charts of the day last week. I'm pretty sure it was on Thursday or Wednesday. Oh, it was here on Thursday. We were in this triangle. And, I made the case for a possible breakout, back to the range high at 71 cents or down here at 69 cents. Obviously, that's going to have more to do with the RBNZ Wednesday morning in New Zealand, or Tuesday night if you're in North America, or if you're in Europe, it's just going to be way early in the morning, probably while you're sleeping. Also, other things that are happening this week. We have Canadian CPI. Now, the dollar Canadian, I have to say that it's really been underperforming for a dollar currency, for a dollar pair. The dollar has rallied substantially against other majors, but it's been struggling against the Canadian. I think a lot of that has to do with with crude oil prices being as buoyant as they are right now. But you can see the dollar Canadian is also trading in a triangle. We are primed for a breakout here. And to be perfectly frank with this consolidation, we get it back above the 200-day moving average, that could be bullish. Now, if Canadian inflation data is a little weaker, that might be something that we're looking at. But just realize that the dollar Canadian has been underperforming. You know what? I have to actually take a step back. I actually have to go back to the Kiwi. I did want to point out one other thing about the Kiwi, which I didn't. I did it in the blog, but I didn't do it just now. We are below the 200-day moving average. And also don't forget that we have, this is what's called a death cross. A death cross is when the 50-period moving average, simple moving average, drops below the 200-day moving average, simple moving average. And that tends to keep more of a longer-term downside pressure on the pair. You can see when we had a golden cross back here in the summer of 2020 after the COVID lockdowns. I mean, that was pretty much like, hey, it's time to be bullish the Kiwi. Look, it was bought on dips. Well, guess what? Now that we have a death cross, the question that most long-term investors or traders of the Kiwi dollar are probably thinking, is it a sell on rally type of story now? we'll see. And I think the RBNZ is going to give us a lot of flavor to that this week. One of the other things I failed to mention thus far, because trying to keep in line with the calendar of events that are happening this week, we also have the Fed Chairman Powell. He's speaking at it's a roundtable event or some sort of, he's speaking at an engagement. Now, remember, we're a couple weeks away from Jackson Hole. And a lot of people are starting to think, man, is the taper or is the Fed really going to announce some sort of, hawkish, verbiage that might make us believe that tapering is coming sooner rather than later, and maybe we're gonna confirm that we're gonna start tapering in 2021. Are we gonna get an exact date? These speaking engagements that the Fed chairman does, you don't know where he might mention something that makes economists and traders lean one direction or the other. So just keep in mind, he is speaking on Tuesday, and I think that's at 1:30 p.m. Eastern, if I'm not mistaken. One of the other big events that are happening this week, two more actually. Well, we have the FOMC meeting minutes. Remember, this isn't the FOMC meeting. This is the meeting minutes. Okay, so we're gonna get the all the content and language from all the other Fed governors, and the way it looks from my non-macro trader point of view is that we're seeing a lot of the Fed governors really fall in line as far as, hey, I'm on board with tapering. I'm on board with tapering. And to read the minutes in this week is going to be very important, because a lot of banks and economists are going to really start to narrow down when they see tapering coming based on those comments that come in from the FOMC meeting minutes. Now, the last event that I think is going to be big is going to be the employment data out of Australia. You guys know I've been an Aussie bear, and Australia continues to wrangle with these lockdowns. Again, we have a brokerage partner. One of our brokerage partners is Pepperstone Securities. They're a large FX broker based in Australia. And, doing projects with them and their team has been very difficult and have been put on hold because of the lockdowns that they're dealing with. It hasn't affected their functionality as a broker, but I'm talking about just other activities. And if it's affecting us, it's got to be affecting the Australian real economy too. So if you look at their employment, what's expected, Australia is expected, their unemployment rate is expected to go up to 5%. They're expected to lose about 50,000 jobs, which is a big number based on their population. That number is already expected, but if those numbers come in any worse than expected, the Aussie might have a negative response. And I have to continue to reiterate, it doesn't matter that copper is going higher. It doesn't matter that stocks are moving higher. The Aussie has been handicapped. And as long as we stay below the 74.20 level, you have to imagine it's still bearish. I think a lot of people are, hanging their hopes on the fact that, hey, we're going to get past this COVID situation. The lockdowns are going to end. The Aussie is going to eventually rally, and it may. But, if the employment data is weak, hell, we could be trading back below 73 cents by the end of this next week. So just keep that in mind if you're trading the Aussie. Now, I want to mention a couple other things with you guys. When you're dealing with the markets, it's obviously a lot of moving parts and a lot of moving pieces happening throughout the course of the week. And if you guys haven't registered for our daily F.A.C.E webinars, they're free. If you want to get my view on the market and the rest of our team, like Ryan from Forex Flow Live, or Stelios, or Steve, or Dale, or Grega, he pops in here from time to time, Andre, if you want to hear our team and their views on the markets, because they change as data is coming in, make sure you listen to the F.A.C.E webinar. It's free, and you can register at the link below. Also, make sure that you're watching the Traders Summit website and using this every single day. There are so many good pieces of just daily pieces that you can come in and read, different economists, experts in the industry, see what they're feeling in the market, see what they're seeing, hear what they're doing. I do a lot of interviews here on Trader Summit. So make sure you take advantage of this free site. It's free for you guys. Check it out. It's tradersummit.net. All right, guys, my name is Blake Morrow. I hope you enjoyed today's video. Make sure you give us a thumbs up. I do appreciate it. Subscribe to the channel, and I will see you guys Monday on the F.A.C.E webinar. Have a great remainder of your weekend. Thanks for spending your time with me.